morning, everybody. It's Wednesday, January 17th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments or would love to chime in, please drop us a note in the chat area, and we'll get to your question or comment during the show. Real quickly here, overnight markets had March corn down 2.5 at 441. March soybeans were down 12.25 at 1215, and March Chicago wheat was down a penny at 581. This morning's retail sales report showed an increase of 0.6% in December. That was better than estimates. They were looking for 0.4%. So a good close to the holiday shopping season. I think it picked up there at the end. It was pretty sluggish to start. As we start here this morning, we've just been talking about a number of different topics. Markets continue to act ugly here, in a time frame that generally we may see a bounce. So we're kind of counter seasonal here, but a couple good points that we were talking about on China. We did have some elections over the weekend. By all accounts, it went to the unfavorable nominee for China. This individual apparently is been all for protecting Taiwan. And so there is some continued unrest over there. So, Jace, what have you seen just economically over there in the last couple weeks?
Well, yeah, I think it stems almost the last year. If you go look at the Chinese stock market or the Hong Kong exchange or index, I should say, it's down 50% in a little over a year and a half. And when you think about China as our trading partner, especially it relates to soybeans, and we're seeing that in export inspections. We're down 20% from a year ago, and we're on a $2 break in beans. We would hope to run into some demand, but I think you could probably relate some of this lack of demand and lack of someone stepping in to buy this break from just a weak overall Chinese economy, a weak growth story. I think a lot of people are, considering investing less in China or investing less in the growth of China. They've dealt with a lot of, overproduction of residential buildings and things of that nature that they have to work through. And, some stories out there that the CCP is actually going out and, tearing down buildings to try to reduce the stock or to reduce the amount of unoccupied buildings. So I just think the demand story is a big part of this problem that we're dealing with in soybeans and corn. So yeah, I don't know if you guys have any thoughts on that, but you can almost put a soybean chart overlaid with a Chinese stock market index chart, and they're breaking in conjunction with each other here over the last month or so.
That's interesting. I'll pose a question. We saw in another record crush number yesterday, and we've been talking about the expansion in biodiesel and crushing capacity quite frequently on the show. Is that enough to offset poor Chinese demand, in your guys' opinion?
I think in the short run, maybe, for sure.
Mm-hmm.
We're going to have a lot of plants going up. We've talked about this. You're going to see those numbers consistently come in above 200 million bushels in the near term. So yeah, I think so. And I don't think, demand's been horrible, but, South America, that's the problem is we had such a bad Argentine crop. And even if China's just stagnant, if they're not going through those incredible growth numbers of 10, 15% a year, like we were so accustomed to for so long, we just catch up in production around the world, because we naturally are growing more every year. And, China, I do see China's pork production, for 23 was 4.6% above 22. I can let Rylan add to that, but I think they've actually increased some demand there. They were, I think there's a good argument that they may have peaked on total protein demand. And we talked about this back and forth with some of how they changed their hot rations to less, a little bit less protein, and they, substitute more DDGs and wheat, and you kind of got, a little bit of a less hot ration, meaning a little bit less meals. So they tried, I think they've been really working to increase their efficiency as well on the feeding side of things, just because I think since the trade war started, back in 16, I feel like that, they felt like they were kind of back in a corner. And ever since then, they've been trying to, adopt some GMO varieties to boost global production. They've tried to increase efficiencies of the crush industry. So I think a lot of those little things have probably added up. We'll never know, but had the trade war not really happened or things gone flawlessly, like maybe they'd be importing 120 million tons of beans instead of 100. We can never really know that, but they have taken a lot of steps to really improve their domestic production and increase their efficiency. So it might not be 100% just a bad story, but I agree with Jason that, certainly there's some headwinds there in China in general. So are they going to ever come back to where they were, 10 years ago? It's a tough question.
And so, and we saw that, right? I mean, corn production too, right, Justin? I mean, you saw that this year with China,
Yeah, and that's, they bought Syngenta, right? Years ago, they bought Syngenta. I mean, I think that was pretty obvious that they want to start adopting some GMOs, some different technologies to boost their production. They're 100 and some bushel yield country, so, boosting it 20, 30% in yields alone is huge for the amount of acres that they have. So they've taken a lot of steps, obviously heavy investment in South America. They keep pumping in billions of dollars into infrastructure. So they want to diversify, and I think, they'll always be coming to the US to some degree, but, I think we've switched to a little bit of a residual supplier. We did a long time ago in wheat, and I think we're kind of getting there in corn and beans to some extent. And, why our lobby groups are pushing really heavy into the renewable expansion, which I think is a good idea.
Yeah.
To kind of, prevent our risk a little bit of being so dependent on exports.
Well, and it's interesting, China, right? I mean, they're probably peak population growth, right? I mean, I think an aging population, that could be a headwind 5-10 years down the road too. Would you think that they're going to struggle with that growth, at least population wise?
Well, it was misstated too, right? Justin, you've always talked about that we don't really even know what that number was.
We don't, but there's some really smart people that have put out some projections. Some as high as losing 500 million plus people in the next decade. Just the aging demographic. We have a one-child policy for 40 years. It's going to have a lot of downriver consequences, and I do think that we probably have seen maybe China's population peak or be very close to it. Makes a lot of sense, at least.
Yeah.
Definitely. Dustin, thoughts to add to the group there? I saw you shaking your head.
No, I think, long term, the renewable story is certainly kind of needed really to replace a lot of this dependence. Half of our demand has traditionally been exports, but we're going to have more than half domestic crush right now. This year is what we're projecting on the WASDE. I think that we are going to be. I think it's going to be an interesting end to the soybean year when we keep seeing crush numbers like we did yesterday out of NOPA, right? That just blew away estimates. Another 2 million bushels more than what the estimate was, a new record high. So in the short run, like Justin said, like that's obviously needed. Market got a little bounce from it, and then we are looking at again inversion to yesterday's wheat sell-off and bean strength. Today, overnight, we're looking at wheat strength and bean sell-off. There is still a major deviation the funds are having with that pair, and I think the funds have been a lot of that move in the last month. So I would say continue to watch that pair and see how that unfolds, because we get short bursts of a connection, where funds are trading it that way, and then it goes back to where they're disconnected again for a while. I think once they get to the position they want to be in, which is maybe they're trying to get short beans instead of wheat, it seems to be the exchange over the last 6 weeks, then we can kind of see that pair maybe disconnect again.
I had a question, Justin, for you. What's the oil story? I mean, I see we continue to build oil stocks. Second straight month we're about 1.36 billion pounds, highest end of the month total since September. With continued crushing the way we're going to be, do you see that market being pretty depressed or?
Yeah, we actually went through record crush for months, and oil stocks also went down. So we have seen a build the last couple, but we're, like we said, we're blowing records off. We're almost 200 million bushels a month in crush.
Yeah.
So oil should go up a little bit. It's still pretty tight at 1.35 billion pounds historically, and the implied oil demand is huge. It's record, right? So we're using a ton of it. We're crushing a ton, and this comes to a long debate of which byproduct can't hang in there with these record crush numbers, right? So the margins are good. So, we're running wide open, all these new fancy facilities that are going to go up. So I think that's going to be the really interesting transition that happens the next 12 to 18 months, maybe sooner, is, meals had a huge break. Usually we crush for meals. We've talked about a lot of times. Now oil is all of a sudden a very valuable product, and we're actually building these plants for oil. Luckily, we had an Argentine massive drought last year against the biggest meal exporter in the world. So, that gave us a bunch of meal demand to help offset, some of the extra meal we were crushing. But now what, right? If Argentina has a decent crop and they get back online, call it March forward with crush, they're going to want to, they're going to be antsy to get out there and be a, top exporter again of these products.
Right. Which we believe that they're going to be, producing a big crop by everything we've heard.
Yeah, definitely bigger, right? I mean, they were down 60% or some crazy number.
Sure.
So they're gonna be anxious to be back and crushing hard, I think. So now meal. That being said, May meal is 364 a ton this morning, down from what 450, 460. So
right,
it's had a big break. I think that's part of what is driving oilseed prices down in general. Just before you know it, we're January 17th. We're going to start harvesting beans in South America pretty soon.
It's coming. Ryland, cattle on feeds coming out this week. I know you got some estimates and a few thoughts there. We'll shoot it over to you.
Yeah, thanks, Dan. On Friday at 2:00 Central Time, we'll get the on-feed report. January 1 on-feed inventory looks to be 102.2. It's on a range of 101.4 to 102.5. Placements, 95.5, and of course a pretty wide range in placements as usual. 91.5 to 98, and then marketings at 99.3 and 98.2 to 100.7 is the range. So just judging by another kind of drop in placements here, if those numbers are close. Once again, it's a wide range, kind of speculating what kind of imports we saw on the placement side of things. It could be a wild ride, after this, but it still feels like no matter what, really the January report's going to take precedence for at least the longer term direction of the market. We've seen feeders and cattle kind of pretty strong going into this report, and after corn prices kind of dipped here too. So this is kind of a changing dynamic. All of a sudden, feed prices are considerably lower than they were just even 6 months ago. So it almost feels like the market is really trying to force expansion here. You still have high prices. I mean, beef prices alone are still kind of holding close to 300. We just got back up to 295 essentially on choice yesterday. A lot of that's because of the weather situation and production getting backed up here, just because the physical movement was kind of tough, and it still is a problem in some areas just with the temperatures and the snow removal and whatnot. So we see the live cattle market, at least Feb, jumped over the 50-day moving average, and I think we're trying to change the trend kind of going into this report. We've got the managed money that is just kind of, they're still in the market, but in a very small sense on the live side, and they're short feeders. So wouldn't be surprised to see the managed money start to come back here pretty cautiously after this report, and maybe potentially just keeping a neutral to possibly more friendly stance going into that January report. So, I mean, all the news and all the technical data seems pretty supportive right now. Cash trade hasn't really developed, but the offers are still around 175 in the South. So the price structure really hasn't collapsed as much as I think as it feels like. We're still holding at at the previous record highs as far as cash goes. So, I mean, we haven't seen this big down in the beef market that everybody was expecting. And, packers are going to try to capitalize on this to get some margin with beef prices rising. If they can get cattle picked up cheaper, they will. But it seems like now that we're kind of coming out of the holiday they may be a little bit more on the aggressive side on the buy this week. So I think everybody's looking for a more steady, possibly higher trade this week in the live side of things. And just to go to on the hog side, China's pork output rose 4.6% in 2023 at 57.94 million metric tons. We know they're in that kind of liquidation phase, and it just feels like whenever you see this, the commodity markets in general tend to suffer, especially in China. Their prices have been collapsing. Hog prices have been collapsing. They're liquidating again, and the last time they did this was, into the pandemic. So, it takes a long time for that to shake out. So they're likely to help try to stimulate that market, the government in some capacity. But yeah, they're still liquidating, and that's usually bad for grains. When they go through these phases, whether it be ASF or which is at least the excuse that's kind of given publicly. But we would expect that to be somewhat true. So
Rylan, just to add to that point, like I was reading through that too, and so it was a record production year for pork, right? Last year in China?
Yeah, it was. I mean, they slaughtered 762 million hogs, and that was up like almost 4%. So I mean, like, just to put things into perspective, the size of their slaughter,
that's wild.
It's pretty massive considering the U.S. is probably like 104 million head. So
7x. Wow.
Yeah, it's a pretty big number. So I mean, like it just. When they say they're liquidating, look out, because they still use that meat. That was the misconception the last time. Is like, oh, well, they're just going to throw these hogs in a ditch and just be done with them. It's like, no, they're actually processing these hogs. Yeah, and that is meat flooding the market at 726 million head flood in the market.
So what replacement rate will they get on those, Rylan? If they're going to liquidate 100 million hogs, let's say, are they replacing most of those, or?
Well, I mean, you would think that they would. I mean, like, that's also kind of the unknown, right? Is like, if prices are low, should they start expanding? Should they keep expanding? I mean, there needs to be some price incentive, I think, to do that, but their prices have been collapsing. So the idea is that over time that replacement's going to be smaller. I don't know what their replacement rate is. I mean, like I don't know if the National Bureau of Statistics is going to publicly release that data or even knows or even tracks it. But you would assume that lower prices, I mean, and continued liquidation is not much incentive without some kind of governmental support. Usually they do come in to offer a package 2 support to some degree. So that's probably what we would like to see. And then at that rate, you'd probably get at least replacement of 1-to-1. If not, try some kind of expansion, but prices need to kind of prove out. They're coming off of pretty big prices, just like we've been. So.
Okay. That's good.
Oh, very good. Just came into the open here, fellas. We've got March corn down 1 3/4 at 441 3/4. March soybeans down 16, 12.11 is the last trade there. March Chicago wheat down 1 3/4, 580 1/4. I wanted to point out we're going to have a special edition of the War Room on January 29th. We've got John Wenzel from StoneX, Director of Energy and Fuel Markets, is going to give us some insight on those markets as we progress into the spring. He's got a nice presentation put together for us. And as always, we are streaming live on X, Facebook Live, and YouTube Live every day that the markets are open, 8:15 Central Standard Time. So we will be back with you tomorrow morning. Thanks, everybody. It was a good conversation this morning. And as always, have a great day. We'll talk to you tomorrow.
Thanks,
Dan.
Dan.